Good morning, good afternoon, and good evening to wherever you may be joining today from around the globe. Please note that this webinar is for informational purposes only and does not constitute any legal or financial and tax advice. I'm a senior associate here at Holborn. I focus on international cross-border tax and investment structuring. I deal with high net worth and ultra high net worth and family offices, as well as a large number of expats from across the globe. See, we're just letting a few more, if you'll just give us 1 minute while we let everyone in from the waiting room. And then we will do the introductions so that we don't have to do everything twice. Okay, for the interest of time, I think we can get started. So why are we here today? Let's give some background to how this has come about. Now, to everyone joining us today, we're very excited to be joined by some of the world's biggest and leading experts from across the globe as we discuss this highly debated and contested topic. And that is the question of the US dollar's position and dominance as a global currency. Simply, to ask that question, is the dollar dead? Now, money has continuously evolved over time from the era of the barter system, commodities, coin, paper, plastic, and now even digitally. Yet while the medium of exchange changes, history's pattern does not. Every great empire has risen, expanded, peaked, overreached, and ultimately declined, and its currency has followed the same path. Looking back at Rome, Portugal, Spain, the Dutch, the Great British Empire, all once global powers. Each believed in its dominance and that it was enduring. Ultimately, each was proven wrong. Today, the United States sits at that center of global financial system, but cracks are beginning to appear in the dollar. The same warning signs are emerging: record debt, fiscal overreach, and growing pressure on the currency's primacy. The critical question now is no longer whether empires fall, but whether the US is approaching its own inflection point, and whether the dollar's era of unquestioned dominance is entering its final chapter. Some see last year's weakness in the US dollar largely as a result of policy, combined with the impact of tariffs. Others see it, though, as history repeating itself. With US government debt at record levels and significant refinancing requirements eased by pressure to lower interest rates, the fiscal capacity to support tax incentives are reflected in the One Big Beautiful Bill Act that we saw come out last year. Now, some believe these measures are expected to stimulate the US economy, to get that activity growing, and over time contribute to a renewed strengthening and that continued dominance of the US dollar. The favored view, though, from many is that the proposed BRICS system, the common currency, the R5 or unit, is unlikely to pose some kind of meaningful change in the foreseeable future. The significant differences in political systems, though, economic structures, monetary policies, and geopolitical interests among member states all make the successful implementation of this unified currency highly questionable and whether it will actually succeed. Historical challenges alone surrounding the euro further underscore these sort of difficulties. And while a new BRICS payment system may improve cross-border transaction efficiencies and reduce costs, will it materially undermine the US dollar's role as that dominant global reserve currency? The South African rand itself has shown strength over the past year, but it remains structurally depreciative over that longer term. Periods of appreciation have historically, been temporary, and the rand is likely to weaken again as the dollar regains its strength. So let me hand over now to Mark McAllister, the senior partner here with us today from Cape Town, and as he introduces our speakers and leads today's discussion by posing these questions to the experts that we have today here with you on this panel. Mark, over to you.
Thank you, Matt. I'm going to dive straight into it. We have a fantastic panelist team. This really is the A team from around the world to answer these very important burning questions. And I'm going to start off with the Chief Investment Officer from LJT. So Sanjay is the founding partner and Chief Investment Officer at LGT. He's got over 30 years experience in the investment management space, and we're very, very pleased to have such a heavy hitter representing the question that we're going to be answering shortly. And Sanjay, thank you for taking the time. Let's just start with this very key first question then. Is this a structural shift away from the dollar? What do we think is happening out there in the world, and how is it impacting portfolios from your perspective?
Thanks, Mark, and a formal hello to all our listeners. Thank you for that very kind introduction. Yes, it's a very interesting discussion that's probably going in a number of investment committees across the globe as to what we're witnessing in the dollar. Is it structural or as you asked, is it tactical? And I think it's probably too soon to answer that question. And if we talk a little bit about the last few years, I mean, let's not forget that we did see the dollar appreciate quite a lot since 2010. So we were in a dollar bull market for 7 to 10 years, and of course, if you look at all the asset classes that one can invest in, discuss, and monitor, currencies is one that have a number of forces that drive the direction. You've got interest rate policy, inflation, lots of the carry trade, lots of impacts there. But suffice to say that the rally that we saw in the dollar up until 2025 meant that it was overbought. There is no doubt about it. So on a PPP basis, it became rather expensive. So, for no other reason than the fact that it was more than 2 standard deviations from its long-term average meant that we were going to witness some form of correction. Now, if you couple that with the fact that we've had a lot of concerns around US foreign policy, you can again see why there's been an element of selling from the dollar from a lot of other nations. And then I think a defining moment, at least from where I'm sitting, was the Ukraine-Russia war. We of course saw the US seize dollar assets, and I think it was at that point that a number of emerging economies were asking themselves, well, if we behave in a manner that doesn't really fit in well with US thinking, they can quite easily seize our dollar assets. So should we not be diversifying? And I think we've seen a lot of that go on, whether it's the appreciation of the gold, but just the whole treasury market and the notion that, yes, there's going to be an element of selling, the whole reserves moving into different currencies. Already we're seeing as a result of what's going on in the Middle East, the Iranians are insisting that they get paid in renminbi. So we are beginning to see the dollar question marks next to it. Difficult to say, like I said, whether it's structural. It could well be that, if Trump is no longer in power in the next election and we have somebody else, the dollar could well come back as a driving force. Suffice to say that from our perspective, it's important to understand that currency volatility does impact our client portfolio returns, right? So we have to be cognizant of the fact that whereas historically for the last 7 or 8 years, it's been quite a simple job. We wouldn't really look at and forecast currencies. Our dollar exposure that we had in the portfolio remained unhedged. We've now gone the route because we're not sure whether it's structural or tactical, but what we are sure of it is still overvalued. After the 40% run that we saw since 2010, it's probably right for us to be a little more selective in terms of the portfolio hedging techniques that historically we may not have deployed. So yeah, I mean, a lot of tools come into there. Like I said, there are a lot of moving parts to currency forecasting. It's not the easiest, except to say that when you look at the different asset classes, currency demonstrates the best mean reverting characteristics. So if it goes too far away from its long-term average, you will find it come back. It's no different to what we saw during Liz Truss, and the pound virtually was parity with the dollar, and that was a great opportunity to go and buy the pound, and here we are sitting at 133, some 30% higher. So again, that was a classic example of a mean reverting characteristic. Short term, it sort of went out of kilter. So from that perspective, the jury's out. I think it's a little bit of both. Structural as well as tactical, but a lot of it right now will be dictated in the short term by foreign policy and of course monetary policy, where people are debating as to whether rates will go up or not.
Thank you, Sanjay. And I think the key point there, you touched on it a little bit, is that there's one man in the world that's really had a big impact on that foreign policy, and ultimately, let's be honest, driving fear into the market. And as we know, people react often to to fear and greed. So what's your view on where we are in the Trump world? And we'll probably go on to a bit more of this in the Q&A at the end, but very quickly, what's your view on Trump? I mean, is that enough of a question? Maybe what do you think we've got coming up from Trump, or as a result of Trump's decision, do you think?
I mean, it's difficult. I think the taco trade is very much rife. I mean, for our listeners, Trump always chickens out. That seems to be the mantra, and we've had a very similar reaction in recent weeks, as you know. Some of his rants have got a bit louder. We've noticed that through his tweets, and it may well be that he himself is unaware. There are people out there that have suggested that he didn't even know what the Strait of Hormuz was before this started, so it never was in his thinking and his plans. So a little bit of an unfair question, because I have to then talk about my views on Trump, which I don't want to, Mark. But from a global perspective, I think it's important to recognize that there is an element of loss of confidence, right, when it comes to the US, at least while Trump's in power, whether it's the NATO side, whether what's going on in Asia, the Middle East. And from a portfolio perspective, that's why you're seeing the rest of the world trade becoming more and more prominent. Concern is that is of course consensus trade right now. People prefer the rest of the world rather than the US, and a lot of that has to do with Trump and his policies. But again, moving back to what is important probably to our listeners and yourselves, is the fact that when you're managing money, it comes down to earnings growth. And despite Trump, what you're looking at in terms of productivity gains, what you're looking at in terms of earnings growth, you really can't beat the US. Even this year, if I'm looking at the forecast, and we've just started the earnings season, we're looking at virtually double-digit earnings growth, and we're in the fourth or fifth year that we will be seeing that. And now, what is the risk in all of this? The risk in all of this is of course that the bulk of the earnings growth is coming from the tech sector, right? And then if you bring that back to the currency discussion that we started off with, Mark, that is why it's so difficult to go out there and decide whether you hedge your currency or not, because the businesses that we are buying are global businesses, right? So whether it's Microsoft that you and I talk about, or whether it's Meta, they do earn their money in lots of different currencies. And so the share price ultimately reflects that. The translation does get reflected in the underlying share prices. So sometimes, trying to be too clever on the hedging front and trying to predict the short-term moves within the dollar can be quite challenging and work against you, because the underlying share prices will reflect that anyway. So from our perspective, yes, Trump and his policies will continue to make our lives interesting, to put it politely. But at the same time, from an earnings perspective, fundamental growth perspective, from a trade perspective, unemployment perspective, all the other areas that you would expect us to look into when we're managing money, a lot of them still have big ticks in their boxes, even during the current uncertain climate, where undoubtedly the short-term inflation will go up.
Thank you, Sanjay. Okay, we'll come back to you as we move into the Q&A bit, which I think really will be the most valuable part of today when we do the panelist Q&A. But thank you for that insight. Moving now from London down to Cape Town, I'd like to introduce Harry, who's the CEO of Future Forex. Harry has a huge insight into what's actually going on the day-to-day pricing between different currencies. It's his world. Harry, I'm not going to steal too much more of your thunder. My question for you on behalf of our listeners today, if my slides would advance, is very simple. Oh, hang on, let's come back. How is dollar weakness reshaping its global dominance, impacting geopolitics and policy dynamics? What's your thoughts there?
Yeah, thanks, Mark, and a very big thank you to Hoban in general for allowing me onto this very illustrious panel of speakers. Very excited to chat to you guys about this. So, in general, I think we need to, as Matthew alluded to, the question really is the dollar dead? And what I think we need to do is take a step back and ask, why are we even asking this question in the first place? And it's got to do with certainly dollar weakness. It's got to do with gold being seen as almost a safe haven, more so than the dollar recently, with a huge meteoric rise in price while the dollar weakens. And I think this is all kind of stemmed from Trump's policies, and his policies, which are largely America first, and partially an intention to weaken the dollar to make to make the dollar more globally appealing so that more can be produced in America rather than abroad. And so what I've done in order to support whether this has resulted in a lack of dominance of the dollar is I've looked at foreign currency reserves, and the International Monetary Fund have they regularly publish a index of what proportion of reserves, of foreign currency reserves, are made up by each foreign currency, including the dollar. And what I found was that there has been a decrease in dollars making up foreign currency reserves. It's gone all the way from back in 2017, it was around 65%. It's gone all the way down to around 57%, which is over a 10% drop in just shy of a decade. And that immediately suggested, well, there is less dependence on the dollar. But when I looked closer at it, I saw that that dependency actually reduced during COVID time when there was a lot of money printing in America. And so foreign policymakers sort of felt, okay, we need to diversify here. But what's interesting is since Trump has come in, there actually hasn't been a decrease in the dollar reserves, which is very, very interesting and almost suggests that foreign currency policymakers are thinking the dollar's fine. Also, the second thing I looked at was how often the dollar is used in international transactions. And again, no real decrease. South Africa, 80% of, loosely, 80% of foreign currency transactions are done through the dollar. Internationally, that number is closer to 50%, which is, again, huge dominance for half of all international transactions to be dollar-based. And that hasn't really reduced in Trump's presidency. And so we see that, according to the stats, no, the dollar is not dead. There's actually still a lot of dominance in the dollar. But what the stats don't show you, and what I'd like to talk about a bit more, is what might happen in the future. Even though right now there is a real dependency on the dollar and dominance of the dollar, both in international money transfers and in foreign currency reserves, there is something to be said for what might happen in the future. And what I want to look at in terms of discussing what might happen in the future is two things. Number one, how foreign policymakers make their decisions. And number two, what strategies have been used by America in ensuring dominance of the dollar. So let's just quickly run through how foreign currency policymakers make their decisions. Well, what we've seen historically is that decisions are not made quickly by foreign currency policymakers. They can't be made quickly. It needs a ton of approvals and requires certainty. And so often what happens is the policymakers will wait for the dust to settle before actually making a change. And so what might happen is in the future, we might see a reduction in dollar dominance, but it may not be yet. And it will be up to the next president to prove it wasn't me that caused this, it was the previous president, which I'm sure Trump will vehemently deny. But the second point as to why the dollar might be slowly dying, although not yet, actually has more to do with the strategy Trump has imposed in creating this dollar dominance. And the example I'd like to look at is one that Robert will talk more about in his section, which is the BRICS nations coming together and saying they want to make a BRICS currency. When the summit happened and they alluded to there being a BRICS currency, it was the very start of these discussions. Nothing was finalized, nothing was close. But what this would effectively mean is that when, let's say, South Africa and India do a transaction, or when businesses in South Africa and India do a transaction, they wouldn't use the dollar as the stable currency used between those two. They would create a BRICS currency, which is used so that the dollar doesn't benefit and America doesn't benefit from internal BRICS, from an internal BRICS transaction. And when Trump got wind of this and when he heard this, he immediately said, that's it. If you continue with this, I'm imposing 100% additional tariffs on your countries. And naturally, the BRICS nations came out and said, sorry, no, we weren't saying anything. We won't continue. And so that created more dollar dominance. And effectively, the strategy being used here by Trump is a bullying strategy. It's one of, if you don't do what I say, I will make your life a nightmare, and I will make your country's life a nightmare, and you'll lose your ability to trade with us. And for South Africa, with America being our second biggest trading partner, that's something we simply couldn't tolerate. And so everyone put their hands up and said, sorry, we won't carry on with the strategy. And in the short run, that works really, really well. Because of the dependence on America, we have to all other countries have to say, right, sorry, we'll continue using you, we'll continue allowing you to be the dominant nation. But what might happen in time is that we're already seeing that we're doing some large deals as South Africa with Germany at the moment in the green energy space. We might start building up more and more direct channels of communication with other parts of the world. With the East, we know we do a lot with China, with Europe, with the UK, with other countries in Africa. And what might happen is over time, we won't need to say no we won't need to rely on America. And so when Trump says, I'll impose 100% tariffs on you, we might be able to say, that's fine. We've got diversification. We've got other countries we can work with. And that's how America would be isolated. And that's how America would lose its power. And the dollar dominance would reduce and the dollar would die. So when asked, is the dollar dead? My answer is not yet. According to the stats, it is not dead yet. But there is a chance that it may be dying a slow death through isolating themselves if these policies continue. So I would absolutely act with caution before putting my life savings in dollars. I'd rather split it between dollars, euros, GBP, to ensure some diversification should the dollar be dying. So that's my take on, is the dollar dying, having looked at the stats.
Brilliant. Thank you, Harry. Fantastic insight and very well qualified to be able to make those statements as well. We're now about to launch our poll. I'll come back to that as we move through the rest of the panelists. So please, if you're watching online, please take the poll and we'll share those answers with you shortly. Moving now on to my section. So many of you know that I take a keen interest in cryptocurrency. It's often the flavor of the minute. Right now it's not. I think Bitcoin's now been declared dead for the 750th time. So I'm going to come here and try and explain to you what our potential view is on the different views on what it could be. So look, the thing about money and the evolution of money, I think you have to go all the way back to when it was formed. And how was it formed? Well, it was formed to allow people to trade with one another. We used to barter with sheep, and sheep for cattle and all the rest of it, or corn for cattle. And the problem is, how do you transact in that way if your corn's not ready, but you really need to get some milk? And that's where sort of money came from. But I try and look past that and stop looking backwards. Let's look forward. And here we are all talking English. It's lazy for me as an Englishman, but that's pretty much the way that the global business is done. Most people speak English, and no different to that. We have the dollar as pretty much the reserve currency, but it's not the only currency. But if we were to talk to our children and our grandchildren, they would probably find that they would be questioning this crazy time. Do you remember, when there was more than one currency around the world? When I tell people, banks used to issue their own currencies back in the day, and they look at you quizzically. And from a technology evolution point of view, I don't think many people really mourn, bank tellers as such, standing in a queue to get your money. They also probably don't mourn people that used to operate lifts. They just accept the fact that the technology has evolved. So my sort of view is that, yes, the dollar is the dominant currency of the world. It's how we trade globally. And is that likely to change? Probably not. But if you were going to redesign the system from scratch for the new world that we're in, you'd probably come up with a system that looks fairly similar to cryptocurrency. You'd want to have something that moves effortlessly. You would like it to not involve banks and other third parties. You'd want it to be as frictionless as possible. And really, when you start describing it that way, it kind of sounds like Bitcoin. And that's the conundrum, when you've got an incumbent system like the banking system. It's kind of like saying to guys that made horseshoes back in the day, well, do you want to promote this new thing called the motor car? Well, of course, people that make horseshoes, I'm going to want to see the motor car. And so that's where there can be quite traditional resistance. The other thing I'd throw in there about cryptocurrency is I really think that because it doesn't have a CEO, it doesn't have a marketing department, it kind of just finds its way in the world. And I think crypto, Bitcoin in particular, maybe has a bad rap unnecessarily. Why? Well, because it's very usable. And one of the first things that happens often when something's usable is people use it for nefarious purposes. And so as a result, there's become this linkage, which is, crypto equals bad, and I think that's prevalent in our industry as well, is that a lot of people just automatically see crypto as bad. And that's I think, a limitation for all of us. I think we should be more open-minded to that. If it was renamed something else like AI money, I think suddenly people would go, oh, that sounds interesting, I'll give that a go, and that's maybe where the psychology of cryptocurrency is something that needs to be considered. So my answer to the question, is the dollar dead? Absolutely not. It's still the world reserve currency without a doubt. But when governments fail, when governments do things that they shouldn't do, and again, I take us back very briefly to 2021, 2022, when the US government decided to turn on the money printers to bail out the country. I think they printed something like 25% of all dollars in circulation were printed in 18 months. And the inflation that follows was blamed on the Ukraine war. It was blamed on the Suez Canal getting blocked. It will be blamed on the Iran situation, what have you. But we trust central governments to do the right thing. We trust them not to print money recklessly, and quite often they're pretty good at it. But every now and again, they break that trust, and we often forget about it. But in other countries where the government of the country isn't trusted, then the citizens of that country will often look for alternatives. And that's where we often see the adoption rate for Bitcoin at its highest level per capita overall. So that's my thoughts on, is the dollar dead? I'm not going to ask myself some questions on that. So we're going to move straight away on to our next panelist. And that's Robert, who's also joined us from London. Robert is the portfolio manager, for North of South Capital. He's been in the industry a long, long time. I won't say how long because you might start to question his age. But very, very experienced gentleman. Robert, if you want to know anything about emerging markets and that very challenging environment to be able to pick the right kind of assets to buy, this is a guy that knows emerging markets better than I think anybody else in his peer group. But Robert, the question that we have for you is a BRICS currency actually a threat to the dollar? Is that something we should be worrying about? Where do BRICS kind of sit in all of this?
Well, thank you very much, Mark, for that very, very polished introduction there. Most kind. So just to be clear, we're very much equity guys, and so for us, if the dollar was dead, that would be fantastic, because one of the most clearest correlations that we have between our asset class and the dollar is that a weaker dollar equals strong emerging market equities. But unfortunately, I don't think it is a simple answer, and I certainly don't think that the main competition is really going to be coming from the BRIC countries. And they're clear, but shall we say nascent attempts so far to actually formulate an alternative. And I think really this is the big issue, because you've got three, if you're overlapping a little bit with all the previous speakers, you've got three main driving forces here. You've got the political issue, where obviously Mr. Trump's antics are somewhat to blame. You also have the technological evolutions, which, Mark, you were actually just talking about just a moment ago, just in terms of the whole tokenization of currencies and making transactions so much more frictionless and lower cost. And then you've got the pragmatic element of the equation, and that's actually much more about de-risking. And this is probably the area which is most relevant to the BRICS countries. And as has been picked up on by Harry a little bit earlier, I mean, a lot of this, whilst this whole idea of a BRICS currency, it's been around for a very, very long time. I mean, I think it's first started around, shortly after the whole acronym was coined by Jim O'Neill back in sort of 2001, I think it was. Where it was there much more of a positive spirited orientation where the evolution of what became known as the Global South and these great trading nations all beginning to actually trade much more amongst themselves rather than between emerging markets and developed markets, that it actually make more sense for them to actually develop their own currency. But this has really just picked up in terms of urgency, certainly following the Ukrainian war. And so I think, it's very clear to see that those countries that are actually the biggest proponents of the idea of a BRICS currency are those that are also the ones which are the most sanctioned. So it's definitely Russia which is leading the charge, probably followed by China as well. But I think it's important to also bear in mind the political issues within BRICS as well. There's a lot of rivalry within BRICS, and so it's actually quite difficult for the BRICS to actually agree amongst themselves about some of the very basic elements of the equation. So first of all, if you look at somebody like India, there's a lot of suspicion between India and China. They have a border dispute which has been going on for a very long time. India is also very dependent on China. They're on a big trade deficit with China. Similar to the US, they're very dependent on things like rare earths and other sort of critical inputs for their exports. And so there's a tendency to be very suspicious of the idea of a BRICS currency, which would logically be most dominated by the renminbi. So I would say that where the emphasis has been following through most recently is much more being in terms of infrastructure and payment systems. And the developments have really been focused on making a mechanism whereby individual payment systems within these countries can actually efficiently make payments to one another. So as a result of that, it's actually become much more of a bilateral trading function rather than this idea of a BRICS currency to actually specifically rival the dollar. And I think that the evidence so far is actually very, very incremental. I mean, what you have seen is particularly between countries like Russia and China for the payment of oil, has either been in renminbi or in rubles. Similarly with India. And then obviously it's actually got the headlines recently in the context of the Iranian conflict, where they're actually talking about trying to get their tariffs in renminbi as well. And so I think this is actually running parallel to a lot of the domestic agendas as well, because a number of these countries have quite advanced tokenization of their own currencies. So, I mean, if you go to China, for example, at the moment, and you try and pay for things in paper currency, it's almost impossible because it's already been transformed into WeChat and Alipay. And so they've actually been trying to move the e-renminbi into the equation, and that hasn't really worked. And so they're now trying to actually do the same on the international front. So you've got a number of these threads all moving together in the same way, but none of these things are coming anywhere close to rivaling the depth of the euro-dollar market, which Harry was actually talking about a little bit earlier, which in past used to actually be deeper and more liquid than even the domestic dollar market.
Thank you very much for that. And moving on now to Lorenz, who is our managing partner for Africa. Lorenz, obviously you're at the front end, as I am, on a regular basis, trying to explain what's going on to clients and try and make sense of all of these fantastic inputs that we get from the likes of Robert and Sanjay and Harry and various others that we work with. Lawrence, over to you for this very important question. Is now the time to sell rand and buy US dollars? Nothing too contentious to wrap us up.
Yes, now is the time, but not because the dollar is dead or dying, but it's the current. So currency timing is secondary for me to structural diversification. Currencies move in cycles, okay, and this dollar is dead scenario. I mean, the dollar has had multiple death narratives in 1970, 2008, COVID, and yet you've still got 58% of all global reserves traded in dollar. As Harry mentioned, 85% of all forex transactions are in dollar. I think also what matters more is where your assets are. So jurisdictional risk is probably way more important. So tactically, if the US is weak, you get a better entry into global assets. If the US strengthens, you benefit from currency uplift. So I think heads you win and tails you don't lose. So my view is always you want to move money away from somewhere where you've got huge inflation differential. The reason why, of course, the rand has been strong quite, for a bit now has been we've got low inflation, which kind of matches that of Europe and the US. But when our inflation goes to its normal levels of 5, 6, and 7, and this most recent oil spike is going to start doing that, if we get a natural 5-6% inflation over a natural 2% inflation in the developed world, you're going to see a 4% buying power differential, and that sort of 4% differential is what the rand will naturally weaken. Then factor in your fiscal pressure, factor in your political and policy uncertainty, and you start getting over time 5-6% differential in currency. So if you, I've always used this thing with clients is, okay, if I today, let's say the rand is trading at 17 rand to a dollar, and let's say, okay, you have $1 million or 17 million rand, and I said to you, okay, you can take one or the other, but you must lock it in a safe. And you're only allowed to open that safe in 20 years' time to take it out and be able to spend it. Would you take the dollars or would you take the rand? And the answer unequivocally is I will take the dollars. I trust that the dollar will be slightly stronger than the rand in 20 years' time. And that goes for any currency that starts with an R. Rand, ruble, renminbi, real, rupee, you name them. If they start with an R long term, they have a structural issue that people just don't always want to face in the moment. But over a 20 or a 30-year period, they are going to say, yeah, I'd rather take the greenback. So the answer to your question, Mark, is yes, I would diversify. I would buy dollars because I think the dollar is still the cleanest shirt in what is otherwise a very dirty laundry pile.
Thank you, Lawrence, and great examples there. I think a lot of what we have to manage with clients is fear and greed related, right? And when you look at what's happened with the dollar, particularly through that period when the tariffs were first announced, we saw the rand there nearly touching 20 to the dollars, and I was probably the busiest I think I've ever been with people wanting to take money out of South Africa. Here we are now at the other end of that cycle potentially. And actually the argument is that nothing's really materially changed apart from how everyone perceives what's going on from a fear perspective. But we're going to move on now very much to the Q&A panelist discussion. So again, for those, if you haven't already, please do answer the poll, which is being launched now, and we'll refer to that. If you've got any specific questions you want us to try and answer in this panelist discussion that's coming up now, please do show using the Q&A button at the bottom of the screen. So I'm going to start off, Matt, if I just bring you back in, obviously you spoke first. A lot of very interesting views from all of our panelists. So what's your view then with what you've heard about the dollar being dead or alive? Have you changed your view since we started? What's anything you want to add?
No, no, I don't think I've changed my view at all. I've had quite a number of clients from around the globe raising this question, and there's actually a client of mine that shared a video once regarding the different global currencies and the global powers that have all come to be. And coincidentally enough, as well, the time frame, we're reaching that sort of same inflection point where it's the right sort of time for it to happen. I don't think so, though. Times have changed significantly. The way the world does business has changed significantly. We're no longer on ships traveling from one place to another. You can move money easily enough through your phone. It's just not those days anymore. And in actual fact, I remember I was speaking to someone not too long ago. The shift just from paper money to plastic money, was a big challenge for some countries. That being able to, I have 10 $1 notes and it's worth $10, and now I have a piece of plastic. I can't see what's on it or where it is, but I know it's worth 10 $1 bills, for example. And now over onto a digital form of currency where you don't have a plastic card anymore. It's just part of your phone and you believe that it is there. So currency has changed and evolved a lot. But the underlying instrument, it's still going to be that fiat system where it's the government giving you that value, promising what it will be worth to you. And while presidents may change and policies may change, what does the world do business in? And at the moment, the bulk of the world still does business in dollars. So I should not believe that it will be dead. Maybe sometime in the far future, but I don't see it, not in my lifetime at least.
Okay, thank you, Matt. Moving on now through some of the questions that we're getting. So, Sanjay, if I can just bring you back in here, obviously as a portfolio manager, everything you've heard today and the kind of questions that we get from clients, this is probably one that I think you're very well placed to answer. I mean, how resilient is the US economy compared with, say, Europe and China? Is America still the dominant force? Are we still in that situation where if America sneezes, the world catches a cold, or are you seeing something changing underneath all of that?
No, without doubt, market is still very much the mainstay, the engine of global markets. Whether you're looking at it from an underlying earnings growth perspective, productivity, margins, they are the best in the world. And arguably, the reason we've been buying Europe is there is hope and expectation that we'll catch up with them when it comes to these metrics. But when you're looking at the AI revolution that we're going through right now, once again, they're very much at the fore. They're well ahead of us here in Europe. Economies like China are trying to catch up with them. The race is ongoing, but right now they seem to be far, far ahead. So, lots of ticks and lots of boxes there. I guess the one area that obviously concerns people is undoubtedly, the person we have at the helm there, and why and what he does can impact short-term sentiment. But without that, and sort of coupling that with the dollar discussion that we're having, one thing we didn't talk about is markets and asset classes are all about flows, and that's how the market runs today. The fact that 65 to 70% of the MSCI World Index is the US, and 70% of the money today is being run by computers, you can clearly see that every pound, dollar, rupee, renminbi, around whatever it is that's being allocated to the market, 65, 70% is automatically going into the dollar, right? So you've got a natural demand for the dollar there. So even if reserves do fluctuate, as long as the US continues to be such a major part of world markets, you'll probably see constant demand for dollars. And more importantly, it continues to stay at the top. And let's not forget, you could have a situation where the dollar does structurally weaken over the next 2 or 3 years because it's been so strong over the last 5-7 years. But that doesn't mean it's not the global choice, of invoicing. That could still remain. You could have, we've had 2-to-1 in the UK, as you will probably remember, going back many years. You could get $2 to the pound. So it was still the top currency in the world, and it can still be the top currency even if it weakens.
Yeah. So I think, look, one of the questions that keeps coming up, there's one guy that this all seems to be coming back to, that Trump has made some significant decisions. Has he gambled with the dollar's position as the reserve currency incorrectly? Has he gone too far? I'll open this up to everyone. What's everyone's view on Trump's impact on the dollar's position? Is he maybe gambled too much with that? What's everyone's thoughts? Anyone want to start with that? Harry, let's start with you because you see this in the actual cable rates and other prices and what have you. Do you think Trump has gambled in the short term with the respect for the dollar?
Yeah, so Mark, I think it's an interesting one because, as we know, Trump makes pretty outlandish statements without thinking about consequences relatively often, and sometimes it works and sometimes it doesn't. But he's not foreign to doing things that are a bigger gamble than maybe the situation deserves. And so my take is, while the panelists in general feel that it's very unlikely that this will be the death of the dollar, I do think it increases the probability, albeit probability might still be low. He is isolating the world in a lot of his America First policies. Without doubt, he's trying to make America more of a central hub within America and to export to other countries and effectively create reliance from all other countries on America. So there is a way that this works fantastically, and actually, America remains and, in fact, cements itself as the centerpiece of the world. There is another outcome, though, that the world gets irritated and thinks, well, let's start creating stronger bonds amongst ourselves and displacing America and displacing the dollar as the centerpiece. So if I were to say, is he gambling too much? My answer would be yes. But do I think that this is the death of the dollar? Probably not, but it does increase the probability. So if I were in charge of America, if I were the president there, I wouldn't be making the same policies he is. I wouldn't be making the same statements he is, because it at least increases the probability of this being a dire consequences for them.
Thanks, Harry. And Robert, can I just ask you a question and link with that? I mean, we touched on BRICS when we were discussing it with yourself. I mean, can they agree on the time of day when all of these nations have exchange controls and very different views and what have you? I mean, I keep getting asked about BRICS currency, and I feel it's going to fall over just on that exchange point. I mean, you suddenly create a mechanism for Russian rubles to flow out of Russia and into something else. I mean, so is it nonsensical, or is there actually something potentially there in the longer term?
Oh, well, maybe, Mark, but no, I mean, I think it's quite interesting as to how those relationships have changed over time. Because I mentioned the suspicion between China and India, that's been going on for a long time. That used to be the case between Russia and China too. They obviously share a very, very long border, and China is very deficient in natural resources, and they effectively just look over the Garden Wall, and Russia's got it all. So they've always actually had a lot of suspicion between the two, which has really changed dramatically just over the last 5 or so years since the Ukrainian situation has evolved, and Europe basically cut Russia off from the supply side of natural resources, most particularly gas. So I think that there's the possibility over time, but as I said earlier, I just don't see any real substantive movements in that regard. I think also just picking up on some of the points that Harry was making also, I mean, I think one's also got to bear in mind Trump has made his statements pretty clear that he actually would like a weaker dollar. He wants his cake and eating it. He wants it to stay the reserve currency of the world, but he also wants a weaker currency. And this interrelates a lot with the issues that we had last year in terms of tariffs and trade policy. And again, this is very much an EM into DM issue because it's all to do with what do you do with your export revenues. So if you have a country like China, or even Taiwan now, which is probably less appreciated than China in this regard, where you've got significant trade surpluses with the US, then it presents a problem. What do you do with those revenues? And traditionally, of course, it's ended up staying in the dollar. And this is one of the reasons why we've ended up with this appreciation of the dollar over the last decade or two. And I think Trump sees that as a problem. It's making his currency too expensive. And so a lot of what was going on last year was to try and actually rebalance that somewhat, to actually, because he wants to see a slightly weaker dollar.
Thank you, Robert. And I think that's the conundrum, right? The strapline, make America great again. It's a bit of a conundrum for those outside of America when you say, well, look, you dominate the equity market, you dominate militarily. How much more do you want? So when they started talking about Canada and Greenland, well, the only real place to go is actually to start invading other countries. So that does sort of, open up those kind of questions. Speaking of the questions, we are looking to wrap up soon, ladies and gentlemen, and we want to try and keep this as succinct as possible. So, Lawrence, if I can just bring you in on this final question that we've had from the floor, which is really about how concerned you are when it comes to clients' portfolios around the US debt. And how much the American government owes and who to. I mean, I've seen various memes on the internet around this sort of stuff, but should clients really be worried about how much the US owes in government debt?
Well, firstly, I don't want to profess to be an expert on debt, especially the immense national debt that the US has. But the one thing that I'll say, America has the tax base that can sort its own debt out. It's probably the only country in the world that has that size of a tax base that can cover it, because the majority of US debt is domestic debt, but it's foreign debt. It's not a surprise to me that you have this. And I'm going to be a little bit of a conspiracy theorist here, but it's not a surprise to me that they go after Venezuela in January, and then not long after that, they go after Iran. The US is now the largest producer of oil in the world, even though it's through shale. But and I know that Venezuela's got heavy oil and needs refined, but if both of those are under US control and you have problems and disruptions through the Strait of Hormuz, other people are going to start coming to buy your oil, and they'll probably have to buy it in dollar. So as I said, a little bit of a conspiracy theory there. It's probably not actually what's happening, but in reality, I'm not sure that anything's going to change quickly. So you need a loss of a reserve status. And that doesn't happen overnight. You need the loss of military dominance, and that is simply not happening with the US. You need oil to no longer be priced in USD. And again, that's nothing like that happens quickly. And yes, you'll have some other trade agreements like the BRICS countries, etc. But there's lots of noise over actual structural change. Yes, the dollar might be a bit diluted. But if you look at the times of the dollar smile, as they call it, the U.S. economy, when the U.S. economy is healthy, the dollar is strong, and when there's global turmoil, the dollar is strong. And you would have seen that as soon as this Iran thing came up, you could always almost press a button, knowing you could press a betting button on the fact that the dollar would create safety, much like the Swiss franc does. So whilst the dollar is still seen and the country is still seen as a country that can pay its debt, then I think it's okay. But as I said, the last thing I want to profess to be some sort of currency expert or debt expert, but or oil expert or any expert whatsoever, to be honest, because we're always going to find ourselves wanting in some way or another. But what I will say is, should you have dollars in your portfolio? Absolutely. Should you have pound, euro, Swiss franc in your portfolio? Yes. Should you have some domestic investments? Yes. And that's probably the best way to protect yourself long term. But as Sanjay alluded to, I would not bet against the American economy. I wouldn't bet against that stock market. I wouldn't bet against their earnings, their growth. Like the rest of the world is so desperately behind that. And if the dollar does weaken significantly, then the American stock market becomes 30 or 40% cheaper. I'd love to buy Microsoft at a 20, 30% discount. Thank you very much. And every foreign pension fund and sovereign wealth fund might think the same, and they would have to buy those assets in dollars. And so, again, I think a weak dollar buys the biggest and most innovative stock market in the world. It buys it at a cheaper rate. So yeah, do with that as you please.
Okay, thank you, Lawrence, and thank you everybody for attending this webinar. Just a reminder that this is an information session. It's not to be construed as advisory in either investment, tax, financial, or otherwise. But with that borne in mind, thank you, gentlemen, all for your insights from your respective organizations and your careers. Thank you so much for joining us. Ladies and gentlemen, thank you for taking the time to join us today, and all the best. Thank you.